Hi, Keith Rushing here with ICOVest Capital Group. I'd like to share with you some things that will help protect and grow your cash flow while reducing your cash flow risk. As a disclosure, I'm not offering financial advice, as that's between you and your tax advisor. What I am offering is solutions for your financial well-being if need be. And the purpose of the presentation is to give you enough information that will lead to another conversation with you. So who can benefit from the information that I'm offering? Financial planners and estate planners, real estate attorneys, CPAs, those considering retirement or who have already retired, and also children who have parents who are retired. I know as a parent, the last thing I ever want to do is to put my financial issues on my children. So this really is a family solution. Well, let's talk about those at risk. There are those that want to reduce their risk while increasing long-term gains. There are people that want to maintain a safe withdrawal rate and not reduce their present lifestyle. And there are those that are already exceeding a safe withdrawal rate now. And there may be those who are not able to fully fund their retirement to life expectancy. And those who are depending upon investable assets, i.e. stocks and bonds. Let's look at some facts here concerning baby boomers. 30% have no retirement savings, 25% save less than $50,000, 70% will need long-term care at some point in their lives. Now, I want to focus on that 70%. 35% will need nursing home care, 70% believe their health insurance will pay for long-term care, less than 3% actually buy insurance to cover it, and the cost range from $30,000 to $200,000 per year. So what's your plan if you fall into that 70% to take care of the cost of long-term care? Well, how do we do this? We want to help you harness the power of your equity and help you design a financial strategy that will determine your future. And this is through a reverse mortgage. Using a reverse mortgage can meet the very needs that you have for the rest of your life. Oh no, not that, Mr. Bill, a reverse mortgage. Hey, I get it. There's enough stories out there, but I want to tell you, the reverse mortgage is probably one of the safest and secure loans that you can get today. So let's just talk about that a little bit. The first reverse mortgage was done in 1961. It was ugly, intent was good, implementation not so good, and certainly the outcome for many was not so good. In 1987, the National Housing Act was passed by Congress under President Reagan. The first reverse mortgage insured by the FHA was 1989, and the first lenders were approved to underwrite loans in 1994. So 1961 to 1987, not so good in the reverse mortgage world. In 1987, things changed drastically because it put a lot of safeguards in for borrowers. It was insured by the FHA in 1989, and since then, they've added so much protection and counseling for borrowers that this is a great way to secure your financial needs for the future. Some misconceptions concerning the reverse mortgage: that it is only for desperate seniors or house rich but cash poor borrowers. The home must be debt free. No, needs to have equity, but it does not have to be debt free. The bank owns the home. That is simply not true. On a forward mortgage, if you stop paying the mortgage, who owns the home? The bank will come and take it. Stop paying your taxes and the government will come and take it. The reverse mortgage gives you control of your property and your equity and allows you to utilize that to increase your cash flow. The heirs incur the debt. This is really a bad misconception because the heirs have many options. One, they can pay off the loan. Two, they can refi the loan, or they can sell the home and distribute the proceeds. Or if it's underwater and they owe more than the house is worth, they can turn back to the bank and no debt. Some will only consider a reverse as a last resort. Oops, too late. By that time, you may not be able to use the power of the reverse mortgage, but use it as a survival tool. We don't want to do that. We want to make it very vibrant and strategic for you. Let's look at some financial facts concerning a reverse mortgage. The proceeds are not considered income, therefore they are tax-free. You pay no more mortgage payments the rest of your life. And should you want to pay the house off, you can still make payments as you desire on your time frame, and you can pay the house off and you still keep your equity. Yes, you must have equity for a reverse mortgage. You must be 62 and over. However, there are products now that even as young as 55 can qualify for a reverse mortgage. Must be the primary home. You're living in that home 6 months and 1 day out of every year. No delinquent federal debt. And must have the financial resources for taxes, insurance, fees, and the upkeep of the property. Qualified properties include new and existing single-family homes, as well as 2 to 4 unit properties, as long as one of those units is owner-occupied. FHA-approved condominiums, townhomes, planned units, developments, and even manufactured homes that satisfy FHA standards. And unqualified properties would include investment properties, second homes, cooperatives, bed and breakfasts, single-wide manufactured homes, non-permitted accessory units on the property, or new construction that does not have a certificate of occupancy. Well, financial risk. How about out of control double-digit inflation? Goods and services going up? Is your cash flow going up? Volatility of the market in Wall Street. As the stocks and bonds continue to go down, what is your stopgap to increase your cash flow in the meantime? We have a housing bubble that's coming, and it's going to bring a drastic reduction of home values. Coming soon to a theater near you. Right now is the best time to get a reverse mortgage because the home values are so high, and that value will carry you through the rest of your life on a reverse mortgage. And what about the devaluation of the dollar? There are some saying that the devaluation of the dollar is going to go 90% down 90% in the next 3 to 5 years. That means that our dollars are not going to be worth much then. And so why not get our equity and use our dollars now while they still have the value that they have now? What I really love about the reverse mortgage is the flexibility to strengthen the financial position of the borrower. You can do a cash out. You want to spend some money, you want to invest it in some other things, you can do that. You can do whatever you want to do with that money, travel. If you want to set up a line of credit, which I think is a great tool, because now you become your own bank. You get into a tight situation, maybe your retirement isn't performing like it needs to, so you set up a line of credit to take what you need when you need it. Also, you can just do a monthly draw. This is a great tool for people who don't have their insurance for long-term care, so they can just set up a monthly draw, take care of that expense, or you can do a combination using any of the above. Take some cash out, set up a line of credit, or take cash out, set up a monthly draw. Whatever your need is, you can design the strategy using the reverse mortgage. One of the other things that people don't know is that you can actually purchase a home with a reverse mortgage. So those that want to downsize and you don't want to take all your equity just to buy another house to not have a payment, use a portion of that, purchase the home with a reverse mortgage, and have your equity, have your own bank. So anyway, it's a great thing, and I really encourage you to take a look at it. Let's look at an illustration of what a reverse loan might look like. Let's say you have a home value of $1 million, no mortgage, your age is 62. At the interest rate of 3.155, you can take out $524,000 cash out of your equity tax-free. An initial line of credit can be set up for $490,000. If you are 72, you can take out more than if you're 62. It's always based on age and the value of your home and your payoff. So your initial line of credit for this loan at 62 would be $490,000. Now let's look at what happens to this line of credit over the next 20 years. So you start with $490,000. If you don't need to use any of that money in year 5, that grows to $561,000. Year 10 grows to $643,000. And if you haven't used it by the year 20, then you have $845,000 of credit that you can take anytime you want. Let's say in year 1 that, well, you have a project that you need $100,000. So now that leaves you $390,000, and so now it builds back up from there. So this is an ongoing cash flow, and you can use the cash as you need it. So I think it's a great product, and I think that if you look at what this will do for you, it will make more sense. Check it out, folks. You really owe it to your clients, to yourself, to your family to really investigate the truth and the power of a reverse mortgage and how it can help you with your cash flow and lowering your risk. That being said, please give me a call, send me a text, send me an email. I'd love to share with you some of the great successes that we have done in helping families that were really needing a solution, and we gave them many solutions. So anyway, I do look forward to talking to you, and thank you for listening to the presentation.